Hello, traders. It's 8:01 a.m. Chicago time on Thursday, the 27th of February, 2018. One more, well, two more full trading days till the year is done, till 2018 is in the history books. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. I want to take a moment. I know that the attendance is light these days because of the holidays. Um, But I want to take a moment to just remind everyone of my background and where I come from. My perspective on the market is that the whole thing is an auction. It is just like eBay, except it's a two-way auction instead of a seller with a bunch of buyers. That's a one-way auction. So no matter the product, as long as there is participation in terms of volume and an unencumbered bid and offer by any participant in the market, then you have an auction. And so I'm looking at the market in terms of what has the auction done, how good of a job is it done, what is it trying to do, and then that results in the contextual read, which is what is the most likely action that these participants will take. Stacked on top of that are the question is a key question, which is what time frame is in control, what time frame is likely to be in control. We never know which one is. There's just no way to measure it. What time frame is likely to be in control? That gives us an idea of what is likely to hold and what is likely to spill through. If the OTF or the highest time frame or the higher time frame is in control, um, then it's not going to give much attention. The market isn't going to give much attention to our daily levels. Well, it's not. Well, it's likely not going to give attention to our daily levels, like yesterday's high, the IB, and so on. Projected, levels that are projected off of fibs, things like that. Um, if the intermediate time frame is in control, then I'm looking at the micro composite. So I'm looking at several days bound together to expect reactions in those levels that are created by, or those zones. They're not really levels that are created by an accumulation of trading days that are on top of each other. If we see that the market is respecting the opening swing initially, the opening swing, and then the IB, then it's likely to respect the prior day's high, low, and close. And we're trading in a short time frame type of market. That's the participant that's likely to be there. In a short time frame market, we often are most likely to see balance, which leads to at some point the market tipping, having too much of one side, tipping and turning into an imbalanced market, by which point the intermediate and higher time frame come in, and that's where we have trends. Balance leads to imbalance, which leads to balance, which leads to imbalance. The market's constantly seeking value, and the market only does a good job of facilitating trade once it finds balance, and we measure that with one, the value area, if there is one, which is determined by the shape of the profile, and then second, the point of control, which tells us what did the market see as the most fair price around. Okay, so just to give you that idea, that coupled with about 18 years experience trading in prop and or in professional arcades, this is the perspective I'm bringing. So there are many people that are doing morning videos, afternoon videos, whatever. And I felt that it's important to kind of give you perspective, and so that way you can align with whomever's providing you with the viewpoint you need. So I've always done this professionally. I've backed people all along, and so it's one thing to be able to do something. It's another to be able to talk about it and to relay it in a way that's understandable or is relevant to someone who's inconsistent, is confused, or is not having a good understanding of the market. So there are many, many teachers out there. There are many, many good traders out there, but not taking a shot at anyone. but my experience has been that there aren't that many good people who can relay what they do. This is why a lot of superstar players never coach. They're good at playing the game. They're not a good at talking about it or instructing about it. So back to where we are. This morning, well, yesterday we had historical moves. Historical moves. One first time in the index type moves, where the S&P basically had 100 and something point rally. I could see the rally brewing. I did warn about it in the Convergent chat room. I issued several caution shorts before it started to blow higher. And I did expect a rotation higher if you listened to yesterday's trader bite, but I certainly didn't expect the market to move from 2345 to 2477, 130 point range. That is just outstanding. I know some will say that they could see that coming, they could see the bounce coming, and so on. But your focus and mine should be execution. I mean, is that information that we can act on? What information could we act on to capture that move? So to me, we will go through it here in a minute, but to me, it's I could see that it was having a hard time pushing lower after the morning short setup off of mid. I could see it pushing through higher, but really there isn't yesterday didn't even have statistics, prior statistics in it. It's a first time type of move across the board, including crude oil. 20-day historical volatility jumped 8% yesterday. Jumped 8% yesterday. Really huge moves. So this morning, with that having happened, the high yesterday in the S&P is 2477.75. We pushed about 4 points higher in the overnight session. We've been selling since. The market's been stuck at the overnight point of control and has pulled back. So on the board today, seeing red, mostly risk off. Yesterday was definitely a strong risk on day. We're seeing the bonds, the U.S. bonds, being up 24 ticks or 0.5%. That's a fair amount for that product. The Japanese yen also up 0.5%. Gold up $4.9. And then the DAX is a laggard today, down 2.23% or 237 points now that it's back in business. The Euro stock's down 58. I believe they're trading. And crude oil is down 2%. Crude oil, again, had a huge jump yesterday. And there were comments this morning from the Russian Minister of Energy about the need to coordinate with OPEC and non-OPEC countries to stabilize pricing. He says that the country's budget is built on $50 per barrel for crude, and we're just below that. So the S&P is off 40 points, which seems like a lot, but it's about a third of the way down, which isn't too bad if you look at it from that perspective. The Dow Jones is down 369 points. The Nasdaq's down almost 100 points, 1.5%. That's how we're coming into the session today. It's just a hell of a thing. This morning, we're looking at, let me find it, in terms of what is likely to push us around. So this morning we got we got initial claims, initial and continuing claims. We get the December Conference Board Consumer Confidence at 10 Eastern. And then we have a few auctions, U.S. Treasuries 3 and 6 month, 4 and 8 week, and 7-year notes. And we get crude oil inventories, API crude oil. Looks like DOE is coming out tomorrow. So they're leaving that to Friday. So we're getting API after the close today in terms of energy inventories. and then we're getting the DOE numbers tomorrow. Tomorrow has several releases, important releases in it. The Chicago PMI number, pending home sales, and then we get crude oil, as I just mentioned. So today, fairly clear, not much on deck in terms of what could interrupt the auction here, except for consumer confidence at 10 Eastern. Whew. All right, so let's review. Okay, not that this is going to be very relevant at the moment, but the expectation yesterday was we would likely test up into this 2391 to 2396 area. I expected a pop up higher yesterday, as I mentioned. Not really looking for it to push through 400. 2400, the century figure, and I was looking for it to drop down, really looking for an inside day against Monday. The secondary is we pop up towards the point of control, 2780, find resistance there and drop out. That's 1 and 2 scenarios, 1 and 2. Neither one of those held water at all. Scenario 2 looked good on the mid short there, as I'd mentioned, but didn't really continue lower. And then I didn't have yesterday in any of my scenarios. I did have a scenario 3 being an open test down, drive up, and finish up at about 2405. But again, that didn't quite work out. This is what we had yesterday. Very noisy, very busy session. Where's this fib coming from? Let me get rid of it. So a very busy session yesterday. So as we look back, a lot of bars to go through, and a 4-tick Renko. I almost need to go to 8 to really see what's going on. It's very noisy. So here we go. So on the open, we push up to 2387, 2382.75, pull back, push up to 2387, fall back through the mid, consolidate, break lower, pull back to the mid again right here. This created the first opportunity against the stock zone yesterday, and for a continuation down into a range extension down. So we broke 2348 down here, extending the range lower, and then we started to walk back up, and this is where I issued that caution shorts. It's pushing back into the opening swing, and then from there it just started to walk up, and it took off. Tested last week's close with a small pullback and continued higher. The IB high was never checked, and we ended up finishing on a neutral extreme high type of day. So there it is, consolidating, continuing higher, push through multiple sigmas, volatility sigmas. The numbers you see there are actually for today because they've been updated. But you can see how thin that profile is, and you can see that it's finishing near highs, pulled right back up to that naked point of control. Very thin area. We have a ton of singles below. You can see the single there, 24.65.75, 24.35.74, 35.75, 24.33, 24.23.75. A cluster of singles down here, just leaving a lot of unfinished structures behind as it pushed aggressively higher. Currently, we're pulling back into almost the first key consolidation area right here before we move into the lower distribution. Yesterday's profile, if we look at the 15-minute, you'll see is it just really struggled to find balance. You can see that it's a bit of a sawtooth kind of a profile. Very, very contested trading throughout. Um, the low had a good taper on it. It did extend the range down. The volume, if you look, was really in line. We ended up with about 1.6 million contracts yesterday, which is relatively high, but actually relatively in line with the recent volatility. It is a holiday week, so we would expect the volume to be lower. So it's anyone's guess what this would have looked like on a normal week. It might have reached 3 million. There was a lot of participation yesterday and a lot of fightingness. If you watch the tape while this rally was going on, what you would have seen is a ton of selling on the way up. There were large lots hitting the bid, watching the market rotate down 4 or 5 points, and then watching them run right through, and then you'd see large lots come in and lift the offer almost to cover. I think that from the way the tape was reading yesterday, it looked to me like many people were struggling to pick tops on the run up, especially when it failed right here at the prior day's high. Uh, at the prior day's high, we ended the one time framing down right up here at 24.1250. Once it took out that high, I could see that there was quite a bit of selling coming in. You could see it in the delta right there. The delta is positive, then the delta is negative right there. You could see a lot of sellers coming in here looking for the market to have tested the prior high and failing back through into the range again, and then those people ended up having to lift right here. Really incredibly interesting to watch on the tape. Um, it just looks like it obliterated quite a few people as it continued to push higher. Again, it stretched all kinds of bands. So if you're looking at VWAP sigmas, if you're looking at TWAP sigmas, if you're looking at Bollingers, if you're looking at Keltners, if you're looking at whatever, it was really expanding and stretching everything to the max yesterday. So I'm sure that hurt a lot of people. So that's where we left yesterday. Looking at the overnight session, all we've done in the overnight session is basically open up, pull down, push that high by about 4 points, and then selling came in, and Europe didn't help. Europe just went into a nosedive, and what we've got is a market that has found balance here in this 24.40 to about 24.20 area and has been holding steady. What we have today is basically a B-shaped profile with some stuff up top. It's really a double distribution almost. But the market ran down and held quite steadily for quite some time for the last 5 hours or whatever. It's been trading the same range. So it's pretty much priced in whatever it needs to price in at this point. So this break from here is going to be important. I'm watching this 24.25 and 24.40 for which side it's likely to take itself up. 24.65 is expected to be the region of first resistance. If we push higher for a rotation back to 24.40, and if we break lower, then we're looking at yesterday's point of control and so on in terms of key targets. So sellers in the overnight session, the volume in the overnight session is about 300 something. Yeah, 388,000 is pretty high. Pretty good participation there. What are we looking at for today? Today, look, there's no way for me to predict what's likely to happen here. This is a very unusual behavior by pretty much any standard and any time frame, really. The fact is, when you look at historically, most of these big bounces on a big drop are taken back. A lot of these are taken back for at least a new lower low before the market really rallies. before we finally run out of true sellers and you're left with buyers, and then they take it back up. So that's the bigger picture, bigger time frame. I don't trade in that time frame. I trade in the intraday time frame. This morning, I'm looking at this to be a fairly strongly contested opening swing. I'm expecting wider swings than normal, and for the market to open in an open auction. I'm looking for it to attempt to continue up into yesterday's high. I'm looking for it to consolidate into that 65 area, reject, come back to where we open, and then to start to walk itself down into this 2393 zone today. That's modest, okay? This thing can have another 100-point day for all I know. I just don't know. But what this means is what I'm watching out for is if it does rally, how does it behave at 65 in that 65-70 area? How does it behave in the 57 area? And how it behaves is a function of how it prints, the tape, the order flow, and I'm looking for an opportunity to fade that and short it for rotation down. Current stops really should be lower than about 5.5 points, according to the latest rotations. 5.5 point stops, that's a lot for this product. That's half a day's range normally. But that's what it takes now to not get shaken out. So take that into account, that your trades cannot be so accurate that you can bypass the need to have really wide stops. The alternative is that we open in an open auction, we drift down, we start to move towards this consolidation right here, test to the other side into this 93 area, impulse up, consolidate, and then start to move higher and continue to squeeze from yesterday. Yesterday's buyers had a lot of confidence. Apparently, there was a lot of volume coming in to the buy side, especially on the large lots. Okay, so there was a fair or very large lots were participating on the buy side yesterday, as well as on Monday. I posted, well, I don't know if I posted it on Twitter, but I posted it on in Convergent Trading to show as the market was dropping, very large lot buyers were stepping in to buy at lower and lower and lower prices. You could see that they got paid yesterday, if they got out. Scenario 3 and 4 have to be in play today. Scenario 3, open, test down, drive up. Scenario 4, open, test up, drive down. If we drive down, the key target becomes 2380, and then we may test that low again. Look, I can talk about this till I'm blue in the face, but the fact is you have to go with what you see. You have to go with what you see. You're going to take losses. Take them quick. Make your losses quick in this type of market, because the only chance we have as day traders is to be able to get past that trade, look for the next opportunity, because the market's giving us the volatility we need to either destroy our account or put something together and walk away with some profits. So hanging on to these losers, and a lot of people have a belief that a loser's not a loser until you book it, which is insane. It's a loser as soon as it passes your predefined risk parameters. If you don't have predefined risk parameters, then head to Vegas, spend your money there. You have the same odds. I'm just being honest with you. I'm being serious. There's just no need to hang on to trades. It is better to take multiple losses and keep coming in with conviction on the direction than it is to sit there and hold on to a loss and wait and wait and wait for the turn. Imagine if you were short yesterday and you were waiting and waiting and waiting for the turn, and you're 30 points in a hole within about 5 minutes. How likely is it that you're going to now close it for 30 points as opposed to convince yourself that statistically, whatever that means to you, statistically, it can't go any further than that? And then you watch it go another 60 points in your face. So just be quick, be smart, and be here tomorrow. Be here tomorrow. That's the key. Your job is to protect your account and come back so you can fight another day. If you can't fight another day, then you're done. Good luck, and I'll catch you tomorrow. Take care.